Welcome back to Morning Trade Live. From Tesla to short interest is a pretty easy transition. Joining us, Ihor Dusaniwsky is a managing director at S3 Partners, specializing in short data analysis. Ihor, so Tesla's still the number one by nominal dollar amount short in the S&P 500, right?
Absolutely. It's the king, and it has been the king for several years.
Okay, so folks still are trying to dethrone it. But in terms of like percent of the shares, it's not super egregious, or how does it compare more broadly?
Yeah, it's around 4% short interest percentage of float. These mega cap and large cap names are never going to have a really high short interest percentage of float. You've got Apple below 100. I mean, that's probably not the metric to look when you're looking at these large cap names. You really want to see dollars at risk. How much money are short sellers actually putting on the table and willing to risk on stock moves share price moves in this stock? The big thing to see right now is that we're seeing short start to cover, so ahead of earnings. So there's a little bit of change of sentiment in this stock.
So total short interest decreased by $32 billion over the last 30 days. For which basket of companies is that metric from? I'm reading from your notes.
Sure, that's just the whole U.S. Stock market. So we're seeing short covering in tech names and some energy names. The short interest in the U.S. is a little over 900 billion. So it's not a massive move, but it is telling us what the street is doing.
And so as a percent of float, to give some perspective here, where is kind of the broad average, like when we look at Tesla, because when we look at, people are going to see on the side of the screen right now, we got the top stocks of short interest. Right. That's just to your point that, the dollar amount's going to be huge for mega caps. What really kind of distinguishes one from the other is the percent of their float. And Tesla is pretty high at 3% of its float compared to like Apple, Nvidia, Microsoft, which are at 1% or less. But what does the broad picture look like in terms of percent of float?
Sure. The short interest float average for the entire U.S. stock market is 5.1%.
Oh, wow.
So, and that gives us an idea that, you got smaller cap names where, you've got 20, 30, 40% of float, even though it's only $50 million being shorted. So you got to really look at the whole breadth of the market. But you're 100% right. Tesla is one of the largest short in these larger mega cap names.
Is 5% average short float? I could be wrong, but I feel like it used to be more like a 3.5 or so for the S&P. Is that on the higher end, or is that average? What does that look like?
You're right. S&P is less because it is the larger cap names.
Oh, I see. Okay.
We're talking about the Russell 3000. You're talking around the 5%. S&P 500, right around the 3.5-ish, depending on what time of year it is. But it's all market cap dependent. So
basically, the smaller you get in terms of market cap, the higher the short float is going. So there's a little bit more concentrated bearishness betting against the lower cap range of the market.
Yeah, look at stocks like GameStop, Fisker, Beyond Meat, Lucid. These all have high short interest float in the 20s and 30s. Because again, you've got short interest, legitimate short interest in the name, and there's just not many shares available. So in order for a institutional investor to get a sizable position on their books, they're going to have to short a good percentage of the company.
Few that do stand out in the bigger cap world, though. Palo Alto's got 7% short interest percent of float. That's pretty bold. Airbnb, 8%. Even Blackstone. I guess folks are betting against the REITs or something. T-Mobile, 5% as well. There's some juicy bear bets out there in some of the top stocks.
Yeah, you're going to see a lot of, I almost call it pairs trading. You're kind of going long some of the better names in the sector and going short some of the ones that you think are going to underperform. So you'll see the big institutions kind of piling into certain names so they have negative future impact on their earnings.
Okay. Now, you have another way to assess shorts, which is how crowded they are. What is that definition? Remind us and tell us what's crowded.
Sure, and this kind of takes into account market cap. So what we're looking at is total dollars at risk. I want to know how many chips. I want to know how much money is being put on the table by short sellers. Then I want to know how big a percentage of the market cap. How many? So I do want to know whether it's 3%, 5%, 20%, because that tells me it's crowded based on its market cap. Then I want to know, is it how's the days to cover? A lot of short sellers get out of a name if it's really, really hard to cover the stock. So it's taking me 6, 7, 12, 15 days to cover my position, cover the short position in the market. I'm kind of scared because I can't exit my trade without having price risk.
Yeah.
And lastly, I want to know if there's stock loan available to borrow a stock. Sometimes you might have only $200-300 million worth of short interest. There's no stock borrow left. There's no more short selling left. So it's crowded.
And where is that happening the most?
We're seeing Fisker, Beyond Meat, Sirius, Lucid, Sava Pharmaceuticals, I mean AI, C3 AI. These are all really, really crowded shorts.
Wow, interesting. Okay, so they're betting against some of the EV trades, betting against some of the hot winners in AI. Okay, what else jumps out to you in the data? Anything we should know? Where are the minefields? Because that's kind of the way I think about this. You know, like crowded shorts. That's kind of a minefield. If you get wrong place, wrong time, that could get ugly.
Exactly, and you know what? There's another thing we produce, something called a squeeze risk. So we're trying to tell our clients what stock is squeezable. Basically, the only reason you're going to get squeezed out of a stock is because you're losing money. So I want to know what shorts are, where shorts are getting pummeled recently. What really was interesting this morning when I was looking at my data was that retail stocks, particularly the stocks dealing with clothing, Gap, Abercrombie and Fitch, Foot Locker, Hanes, Victoria's Secrets, Five Below, American Eagle. These are all squeeze risks. So you know what? There might be a pop if these shorts start getting hit some more with higher stock prices. There might be a pop because we're going to see buys to cover in this sector.
Fascinating, because those stocks had been doing really well the last few months, and I even commented a few times on the show that it was kind of peculiar in a way. So maybe we've got some answers there where there's too many people betting against it and they're getting squeezed. I mean, you got a fresh new high for American Eagle today out of nowhere.
So you know what? You're going to see shorts leaving because you get smacked around pretty hard. You're going to exit your trade. Someone's going to tap you on the shoulder telling you, let's find something else to short.
Yeah, because American Eagle ain't it.
Yeah, exactly.
All right, cool. Always love the insight. Thanks, Ihor. Appreciate it.
Take care. Nice being here. Thank you.
Absolutely. Mr. Dusaniwsky is managing partner. That's 3 partners. All right. Know who's betting against you because the squeeze potential is real, and so are some of those crowded shorts if they don't come true.